Well, good morning, everyone. And thank you for showing up. Likely some others will step in any moment, but let us just start. The first, and maybe one of the more interesting panels of this conference. It's about a promising financial future of Africa. So my name is Olivier Dijters. I represent DWM, Developing World Markets. We are a US-based impact investor and mainly focused on investment into the financial sector. I'm heading the African and Middle East region for DWM. And if any of you want to connect after the panel, then please feel free. But that's not about that. Today it's about the promising financial future of Africa. And we have a very distinguished and diverse panel in terms of background. I can see that it is male-dominated, so sorry for that, but I didn't choose the panelist. Let me briefly introduce them. So to start off, we have Mr. Wahid Ben Tafous, Investment Director of BII, where he is responsible for managing relationships with partner financial institutions in South Asia and Africa. Wahid brings a wealth of knowledge and expertise in the debt financing and impact investment industry. Then we have Mr. Mehul Pandya, MD and Group CEO of CARE Ratings Limited, also a member of the board of directors of all subsidiaries of CARE Edge, and being the vice chairman of the Association of Credit Rating Agencies in Asia. Next to him, we have Mr. Russell Curtis, CEO Invest Durban. Mr. Curtis has ran the Invest Durban company for over 20 years. He also sat in the UN Investment Advisory Council, so also bring a lot of expertise. Next to Mr. Russell, we have Mr. Kanungo, Director of Private Equity and Fund Development at Incofin Investment Management. Mr. Kanungo drives the development of Incofin's new PE and private debt impact investment initiatives, and is also responsible for managing relationship with investors, but also working on transactions, and mainly in the water technology sector. And then finally, last but definitely not least, Mr. Ludovic Verbiest, Managing Director of Emil Group, a lawyer by education and profession. Mr. Verbiest became the Managing Officer of Pargesa Holding and Managing Director of Banque Edmond de Rothschild in Mauritius. And finally, he is a lecturer and regular speaker at conferences on international taxation. So again, thank you very much. This is our panel. Let me just start asking each panelist. Again, the topic is about Africa's financial future. So let me just start by asking the panelists each to give their view on the opportunities and challenges of Africa's financial future. So maybe to start off, Mr. Ben Wahid.
Thank you, Oliver. Good morning, everyone, and thanks for inviting me on this panel. Before going into the challenges and opportunities, I would like to go back to the title of this conference, which is Africa's Promising Financial Future. So the question is, the future of Africa is promising? And from my perspective is yes, yes, and yes. The reason being is if you look at the demography of Africa, okay, today we're around 1.2 to 1.5 billion, and by 2050 we'll be around the 2.5 billion. Okay? If you look at the resources in Africa, it speaks by itself. But also, most importantly, is when you look at the age of the population, which is mostly made of youth. So you can see that the future has to be promising for Africa. However, obviously there are challenges that are facing Africa, and particularly in businesses in the private sector. And I will start by the key challenge that we start with is about perception. The perception in Africa is negative. Okay? People that are looking at Africa are gathering their information from the news, they're gathering their information from from of the report studies, and they form negative opinion about Africa. However, as soon as they put a foot in Africa, their perception completely changed. And this is where we ask people to go into Africa and get their views on the ground. The second challenge that is facing businesses, particularly the private sector, that we've seen when we go and see the banks and the institutions in those markets, is currently the competition that the private sector is facing from the sovereign, from the government. So when we speak to the financial institution and say, why are you not lending to the private sector? They say, logically, look, I have a T-bill from the government that is paying me 40%, that this is low risk and is a government risk. Why would I go and finance the private sector? So that competition is there, and it's posing a problem for investment. Obviously, there are other main challenges that everybody are aware of. Is in the banking sector, for example, banks are typically of low capitalization. So they have very low capital. So even their capacity of lending is going to be extremely constrained. So even if we provide liquidity to this bank, they won't be able to deploy the funding. So these are actually sort of the key challenges. Obviously, there are challenges that are related to systems that they need upgrade, and we'll talk later about the role of development finance institutions into helping financial institutions in upgrading and increasing their capacity. So we'll go back. So these are actually, in a nutshell, the key challenges. There are others, but these are actually the main ones that I will say right now, and we'll come back to the opportunities later.
Thank you, Mr. Ben Tanfouz. That seems indeed very recognizable challenges. Going further, Mr. Pandya, how is your view?
First and foremost, I think, Olivia, that the entire promise of the financial future of Africa needs to be seen in the context of what's happening globally. Everything is intertwined. And if I have to pick up few aspects for the consumption of everybody, first and the foremost is that the economic policy uncertainty index, when seen in the context of the global trade flow, that is rising, and the global trade flow is progressively coming down. The second aspect is that the global FDI as a percentage of global GDP, that is also very surely but coming down, right? And from the pre-pandemic levels, and this we have seen a consistent trend on that. The third aspect is related to the moderation of the economic growth in the various economies and the rising gross governmental debt. So that raises questions on the debt sustainability aspects. Now, when we see these three key components and juxtapose that against the African continent, few things they tend to emerge. The first is that let's give also credit to the African economies that from the perspective of a long-term economic growth, it is showing a consistently upward trend, which is a good sign. But the fact also remains that the population growth is outpacing the economic growth. And from that angle, there are three elements that I'd like to highlight what potentially should be the focus areas. First aspect in this regard is, from a rating agency perspective, we'd like to see a significantly key component in terms of the percentage of the investments as a percentage of GDP, and that has to go into the key revenue generating assets for the future. So what we call as the gross fixed capital percentage formation as a percentage of GDP, that has to show a consistently increasing trend. The second aspect pertains to the financial markets themselves, the banking and the debt capital markets in this. And in this element, I think the last mile inclusion, the financial inclusion becomes very important, and the focus has to be there. And that brings us to the third element, which is in the form of significantly large component of investments in the digital infrastructure, because both the above things, the gross fixed capital formation from the infrastructure perspective, as well as the banking and the debt capital markets, which could be leading to the financial inclusion. Both these aspects, they can get the necessary momentum, provided there is a significant digital infrastructure also which gets created. So I think from that perspective, we do see some green shoots and some focus areas of the African economies, and we are hopeful that that should be gaining further momentum, which could lead to the promising or the realization of the promise of bright future for the African continent.
Okay, Thank you. Maybe one specific question. Do you see a main difference between India and Africa?
Certainly, I think so. 15 to 20 years back, India had a similar kind of a predicament, right? We had a high fiscal deficit. We were required to invest heavily on the infrastructure creation, right? And at the same time, the banking sector and the corporate and the bank's balance sheet, they were all very stressed, right? So from that perspective, we do see similarities in how India has become the fastest growing large economy, and with a significant focus on infrastructure and the digitization of the last mile payment aimed at financial inclusion. I think there are success stories which could be emulated.
Okay, thank you. Mr. Curtis from South Africa.
Yes, good morning. And as we say in one of our local languages, Sanbonani. I like to teach that word around the world. It's part of the Nguni language. So if you meet a South African, you can say Sawubona. So Sawubona from South Africa. You know, we're talking a little bit about finance and investments. And so the investment space is the space that I've played most recently. I am a reformed banker, so apologies for the GFC. I did spend 15 years in corporate finance, and I know we messed up the world, so now I'm doing my community service to try and pay back for that. I think it's helpful when we look at Africa's challenges. They do, in fact, become the opportunities, but we need to understand where we are at present. You know, what is the landscape at present from a scale point of view, from a sector point of view, a geography point of view, so that we understand those challenges and opportunities a bit better. So I'll focus really on where we are in the landscape at present right now. Sub-Saharan Africa, expected by IMF to grow about 4%. I'm sorry, South Africa is not really contributing much to that. We're only at 1%, but hopefully we'll pull our socks up going forward. Our banks, however, as this is a banking section, are doing extremely well. I think everyone who knows Southern African banking and South African banking in particular, depending on some of the ratings, we're somewhere in the top 5 on the planet, and also great as an investment opportunity. South African banks cumulatively ROE sitting at about 12% there and thereabouts, and it's great to get double digits, you know, with manageable risk. And then from a performance point of view, their cumulative earnings in the past year are approaching about £7 billion, or about 175 billion rand. Capital inflows are doing well, I think, across the continent. A record year last year in terms of FDI, about $97 billion worth of FDI coming into the continent as a whole. South Africa, we're on track for the first half of this year with about $4 billion of FDI coming into South Africa for that. I think from a financing point of view, it's great to see the reopening of the Eurobond markets. So Morocco, 3 billion, Angola, 1.5 billion, Nigeria, I think are planning about also 2.5 to 3 billion, including a $500 global sukuk. All this coming, as we know, on the rails of how do we get payments going cross-border, you know, and so fintech, those in the market will know fintech doing extremely well. Depending on who you talk to, those mobile money platforms, there's somewhere between 750 million accounts and account users. Some say as high as 2 billion mobile money payment accounts across the continent. So great rails for that to transact on. And those payments going globally are somewhere in the order of $1.7 trillion. So as we see, the challenges across Africa become the opportunities across the rest of the world for everyone sitting in this room and beyond. Trade, big opportunity, as we know. We've heard about the populations, demographics, we've heard about that. Quite a great, whether you want to call it challenge or opportunity. Africa's median age is less than 20 years old. And so by 2035, we'll have 6 of the top 10 megacities of the planet on the continent. So yes, population is a challenge, but also becomes an opportunity in those demographics. And clearly energy, huge transitions in energy and energy security. In terms of South Africa, we've got about 9 gigawatts embedded solar and lots more still to come out the ground, with private sector contributing 6 to 7 gigawatts of solar in South Africa alone. So challenges becoming opportunities. And really, as I land, whether you want to call them 4 challenges, but they become 4 opportunities, it's the obvious stuff. Number 1, it's all things infrastructure. Number 2, it's all things finance. Show me the money, Eddie, show me the money. Number 3, it's all things logistics and moving across a continent that can really absorb just about every other continent. If you take North America, China, and everyone else, and you put it on Africa, you all fit inside my hometown. And then the last challenge, which is becoming an opportunity, I think, is all things consumer, whether that be in consumables themselves, durables, or even services. Thank you.
Thank you, Russell. Mr. Kanungo, Director, Private Equity at Incofin.
Yeah.
First, thanks for having me here. I was thinking about the panel earlier this morning and listening to what Wahid and Mehul have said. If there's one word that comes to mind when I think of Africa's financial future, it's ownership. I think it's very important to see that the world today that we're living in is very different from the world we were living in just even a couple of years ago. Interest rates are extremely high today. We're seeing a lot more focus on domestic capital from international players. And Africa as a continent has traditionally relied a fair bit on international flows that have almost halved since 2017. Right? So that means that there's a role that local capital needs to play when it comes to mentioning, we mentioned a few themes like infrastructure, like energy, like transport, and the local asset owner ecosystem has an important role to play in making that happen. And we're already seeing things like that happen in, say, places like Nigeria, in Senegal, in Kenya. And this effectively mirrors what we've seen on the ground for the last 25 years since we've been working in the space. So I'll give you an example. We often work with financial institutions that are serving the bottom of the pyramid. So not your traditional large banks, but really microfinance institutions and institutions that are catering to SMEs and so on. And there, what we're seeing is, to give you an example, we work with this institution called ACEP in Burkina Faso, over a decade-long partnership, and today they've become the second largest institution in the country when it comes to microfinance, right? So we've been a partner in that growth story, in that growth journey, and we've seen them transform from what I would say is a small but impactful player to a player who's now shaping the market. And we're going to continue seeing that happen across industries. The other implication is, when I'm not talking in rooms full of investors, there's often a question, what are the implications of something like this in real economy? Because, finance is great for people like us, but for a common man, for a layman, what they understand is real economy. And we've invested in, say, agri-food companies or in drinking water companies. And again, I'll give you an example. The kind of investments we made in agri-food companies through some of these financial institutions or even directly, we are seeing that farmer incomes increase because they're able to access markets. So we have a fund called Fair Trade Access Fund, through which we see that farmers are able to certify their crops like coffee, cacao, and access markets that traditionally they would just not have access to, which means their incomes are improved, which means that there's a positive environmental impact and so on. So I feel like the financial inclusion, the financial institution, the banking space, as you call it, has a very important role to play when it comes to making a change in the real economy. We've also seen that in the drinking water space, and we'll come to that in just a bit. I think I'll quickly close with maybe one challenge that I see, and the biggest challenge I see is the challenge around inclusion and resilience. I think it's very important to make sure that much of the growth that we see on the African continent today translates to improvement in lives and improvement in environment across all segments of the society, and not that the fruits are just left with a few people, which we've seen happen across emerging markets in several countries, including in Asia. So those are my 2 cents.
Thank you. Mr. Verbiest.
Thank you. Good morning. Sitting here on this desk, we feel almost like rock star with very strong lights in our eyes. So it's a very nice feeling. Thank you for having us. It's also, word spreads out quickly, because when we started at 9 o'clock sharp, there were not many people in the room. But now there are quite a few people, so word must have spread out that this is one of the most interesting panels, probably. Okay? Well, what I like to say, I like to take a more macroeconomic approach compared to what has been said so far. I think the future of banking in Africa lies in taking, or should I say, the banking sector, or Africans should take the banking sector, their banking sector, in their own hands. What we see today in Africa is generally European banks pulling out. Okay, and in particular, you all know Société Générale, Barclays to some extent with AFSIC, that's a bit different, but BNP Paribas also, they're rather pulling out. They don't like to have African clients, and it's not a matter of skin color, okay, I insist on that, but it's a matter of residency. I have friends in Kinshasa, of Belgian origin. They had accounts for 40 years, private accounts in Belgium with Fortis, for example, not to name the bank, and suddenly the accounts are closed, okay? I know experiences in Switzerland where only because we have links with African countries, or even Mauritius or Seychelles, accounts are closed, okay, without reason, okay? There is a big push in European regulators, and Swiss in particular, but Belgian, French, not to do too much business anymore with African countries unless you have in-house legal expertise on these countries, okay? One thing you have to, I think we need to see the emergence, and there are already some there, large Pan-African finance groups or banking groups, okay? And one particular idea I would like to leave with you is to invest or to have links with Mauritius. And Mauritius should really be considered the Switzerland of Africa. Already geographically, it's also east of Africa, like Switzerland is east of at least Western Europe or Central Europe. Okay, but Mauritius has also developed now in the past 20, 30 years as a finance center, premier finance center in the world, very well regulated. And they also have developed a lot of asset management, private banking. The advantage of having links to Mauritius is that the legal system, political system is secure and is quiet. Okay, when you see today what's happening in Madagascar, it's a bit frightening, okay? And this is not the first time. What you see, what is happening to some extent in Ivory Coast, which is one of the most developed African countries, economically at least, Ouattara wants to seek, I think, a fourth term. Well, there's unrest in the street, okay? Now, if you're a resident there, an investor, you want to safeguard your assets as an investor. Why not use, and the legal structures are there, why not use Mauritius as a safe haven where you put your holding company, operational holding company, and at least your assets are safe, okay? And less, or should I say, political risk in the countries involved. But you need a bank to do that. We have banks in Mauritius, but we've also seen that there was a bank on Ivory Coast, the EFG, they wanted to acquire a bank in Mauritius, that didn't go through. There is one in Kenya which deal got through, and they have partnership now in Mauritius. There are other groups in Africa looking to invest in Mauritius. And I think that's really the thing, okay? We have Moroccan bank, BOA, Bank of Africa, you might know also, large African group, banking group, okay? They're also involved to some extent in Mauritius already, okay? So my message would be the future of banking in Africa, yes, by African-owned banks, their own, and linking to Mauritius, which can be seen as a safe haven within Africa. Okay, thank you.
Thank you. And I mean, I've never been to Mauritius, but I believe it's also a beautiful place, right?
It is indeed. Many nice beaches, completely different from Reunion, which is next door isle. That's more volcanic and not many beaches. Mauritius has beautiful beaches.
Thank you. Thank you so far, all the panelists. What I also wanted to ask them, I mean, having lived in Kenya for the last 9 years, I can see a change in the political environment, which doesn't always help the private sector or the banking sector. Then again, as you mentioned, in Burkina Faso, where we are also present with DWM, we see a coup and then a coup after a coup. And seemingly there is not necessarily an effect on the private sector or the banking sector. So I'd like to ask a panelist, and let me know who wants to start first, to what extent the political situation or the change in the political situation, as we also noticed in East Africa, actually has an effect on the financial sector, or that's maybe actually so far limited. Anyone wants to start?
Yeah, let me start. Definitely from the, because since we assess from the credit risk assessment perspective, both on the sovereigns as well as on the institutions in various countries, I can give you the perspective that the political changes and volatility of the political changes, for that matter, right, that has a significant bearing on the outcomes per se, because essentially, see, the kind of policies which could have been put in place, I mean, they can easily get derailed, right? And at the same time, it could also be a question in terms of, like, say, how any long-term investor would like to see a continuity of the policy measures. I mean, they can't be taken for a ride all of a sudden, right? And we have ourselves witnessed and experienced those aspects. So what I believe is that from the continuity perspective, you see, even if the governments could be changing as a part of democracy or otherwise, right? Even if the governments could be changing, if there is a broad level of political consensus on key aspects of the functioning and the policy measures as could be impacting the financial and the infrastructure growth, we could be better off. But if it could be leading to any kind of a complete 180-degree turn on this, then we are witnessing significant volatility, and which could be in a way detrimental for the investor sentiments. So it does have bearing in my view. Yeah.
Maybe to add
Yeah,
to this,
sure.
and I think definitely the political changes and present a big risk for investment, particularly if you are sitting outside and reading the news and just getting your news from the reports, is definitely is a big risk. However, again, investment is a long term, and it's based on partnership, and it's basically is the partnership that makes the differences. So we've seen in many of the countries that we've been investing in. So we've seen changes in the political spectrum, but the investment remained safe is because of the choice of the partner. So there will be core partners in many of these markets that we are investing in, that there will be the safeguard for the investment. They will be able to navigate the political spectrum. So these are actually the key things that we look at is partnership, and that's what makes the difference in alleviating or at least mitigating the political risk.
Yeah. Maybe at the risk of sounding perhaps a bit provocative, I think we also need to look at the changes in the political landscape in Africa in the global context today. And we are living through a very politically turbulent time across the world, and Africa is no exception. So I mean, just building on what Wahid was mentioning, I think it's very important to take a more long-term view, which we often do, and invest with partners who we are aligned with in terms of values, in terms of the way they see the future is also the way we see the future. I think that's very important. And Mehul mentioned something on political certainty or policy certainty. I think that's very important. But we're seeing that around the world that some of the rules of the game have changed and are constantly being tested even today, even outside of Africa.
Okay. Anyone else wants to respond?
Just one 30-second comment. Africa's never been an easy place to do business, but those who have come and those who have broadened their partnerships, those who have embedded themselves with local leadership, those who have transcended local politics and taken continental views, have prospered for hundreds of years. And so you look at the world right now, do you want double-digit growth rates or don't you? What continent's offering you double-digit growth rates? Well, I think it's the African continent. So it's about managing that risk if you want good growth rates.
Okay, thank you. Maybe moving on, as all of you know, Africa has 54 countries, so it's a pretty wide continent. Does any of the panelists actually see also a bit of a difference in the region when it comes to the topic of today? Anyone?
I think there are definitely differences in the market. Africa is a big continent. As many countries, they present different perspective, different obviously structure. If you look at the North Africa, it's different from South Africa, Sub-Saharan. But I think the important thing is we need to be focused. As an institution, where do we want to invest? What are the risks that we are capable to take? But also, what are the returns that we're looking for? So these are actually the element that we need to look at. I would like really, while you answer this question, to bring a specific example, just to be very concrete as to how we look at risk and how do we assess it and how do we go invest in some of the most difficult markets. So I talked earlier about perception. Yeah. So this perception, probably I'll tell you the story of when we looked at country Sierra Leone. So BII has invested in Sierra Leone. We've closed last year a facility with EcoBank, one of the large local groups. And this is a risk-sharing facilities to support SMEs in Sierra Leone. So the story in Sierra Leone for us started in 2022. So BII was leading initiatives called ARIA, which is Africa Resilience Investment Accelerator, which is a consortium of DFIs. And their role is to support, at that time, 5 countries: Liberia, Sierra Leone, Benin, DRC, and Ethiopia. And I said, okay, we will create the sort of the precedent, and we'll support this market. So when we went to first visit to Sierra Leone, I was impressed because this is not at all what I've been reading. So I've met with the people, I've met with the banks, I've met with the businesses. They are very well advanced. They know exactly what they need to do, and they know exactly what their markets are. So when I come back and we start talking about it, obviously we were faced with skepticism and saying, what are you going to do in Sierra Leone? It's a small market. How is that? It's very risky for what we read. So I think what the concrete actions were to prepare the ground. We had all the studies on the ground, but also we had the management, we had the decision maker going into Sierra Leone and seeing it by themselves. So this is alleviate the perception that I was talking about earlier, is bring people on the ground and let them discover the market. But also the most important thing, again, is the partnership. Finding the right partner that know their market very well, and they will tell you what their needs are. Instead of us coming with our product and say, okay, use this, you need liquidity. They told us, we don't need liquidity. What we need guarantees, because my capital is small. Even if you give me liquidity, I will not be able to deploy it. But what I need is a guarantee. So we heard it from them. They told us what they need. So again, we have to listen to our partner and bring the adequate product there. And obviously be able to help your partner. So you need to have instruments, which is what we talk about technical assistance. So again, it's helping those banks to develop their system and increase their capacity. That will help in terms of basically promoting the investment in those markets.
Thank you.
I think both in terms of, I'll just like to add, both in terms of similarities as well as the differences in the banking sector across African countries, we have seen certain trends. Now, in terms of certain similarities, what we have witnessed is the kind of policy rates being higher than the deposit rates. And so there is a tendency in the part of the banks to pocket it in the government deposits and earn out of that. But at the same time, the corporate lending is not getting the positive impact of that. Right? But what we have tried to do when we started off our operations in Mauritius about a decade back, I mean, there was readings were non-existent, and so were the debt capital markets. So we tried to address both the components of the financial sector, the banking segment, as well as the debt capital markets, the bond markets. And with our intervention on that, we have tried to ensure that the benefits of the ratings through the capital relief percolates to the corporates. At the same time, there is a longer tenure debt also, which is available through the debt capital markets. So I think there is a way in terms of addressing this kind of challenging situations, and there has to be focus of all the players on this.
Okay, thank you. Anyone else wants to comment on this? Otherwise, okay. Because I think that the last question for now, because I'd like also to give the audience the floor. Sir, you have a question already?
Yes, I do.
Please. Sorry, the microphone for you.
Thank you. My name is Reginald Masawi from Tanzania. My question is around the pooling of banks from Africa. And we have seen the tendency of international banks wanting to do business with the banks in Africa. And now, how is this going to affect the investing in Africa when the international banks are pulling out of Africa, especially in the retail space?
Maybe
No,
Mr. Biester first?
that's precisely the issue, okay? The banks such as Société Générale, they were present essentially in the western part of Africa. They're pulling out. Other banks are pulling out as well. Now, we don't have today, I think, a powerful financial institution, powerful enough to do business on a wide continental scale in Africa, okay? And my view is a bit what I tried to say earlier, is that you need a platform out of which to invest and to structure the deals. This platform must be solid politically, legally, financially, tax-wise, attractive, of course, okay? So we have a few of these platforms. One is Casablanca, the other one is Kigali in Rwanda, and of course Mauritius. I read last week that Mauritius has, for the first time, become #1 in international funding. I don't know exactly what. There was no figure. It was in Jeune Afrique, I think I saw that. That Mauritius, for the first time, beat Casablanca and was the #1 financial center in Africa. I think Africa, like Europe also, needs such strong financial centers. And that's where you will harness the power and concentrate the power to lend money left or right to various African countries, structuring deals. And again, what I tried to say earlier is I think Mauritius is in a very good position today to be that center for Africa, okay? And that's the way probably forward. We see interest in Mauritius. We've been contacted already. My small company, Amil Financial Company, we've been contacted already by potential partners in Africa who want to pair up and pair up, associate one way or another with local companies in Mauritius. Okay? Did I answer your question? No?
Yeah.
Thank you.
Maybe one quick comment. I mean, taking a step back from banks, I mean, we are an international financial institution ourselves, and we think there's a lot of opportunity in Africa. We have recently launched a dedicated fund that invests exclusively in Africa. We're doubling down on the African story. So I think we also need to think about, yes, it's true that banks, international banks might be pulling out, but are there other financial institutions who are not traditionally banks? Are they also looking to invest in the businesses? And my sense is probably yes.
Maybe just to add as well, I mean, again, we've seen the international bank pulling out. They left a gap. But we're seeing very rapidly this gap being filled by the local African groups. So Russell was talking about the South African banks that are actually expanding. But also we're seeing other groups like, I talked about EcoBank, but also the Nigerian banks, the Moroccan banks, actually they're filling that gap. And what they found that what the international bank left also competencies. They left people that they know the products very well. They left systems behind. So these are actually what we've seen growing. And DFIs like us are actually supporting the regional groups, basically with financing, to actually fill that gap left by the international banks.
Okay, thank you. I think there's another gentleman with a question.
Good morning. My name is Ben Swinkels. I worked 30 years for FMO. I was 17 years chairman of Africa Invest, which we used a lot. I see also Incovi, and I was in the board. I see a good friend now standing up. I would like very much, thank you for your presentation, Mr. I believe Tamfus from the British International, because of you are telling us about the positivism of Africa. And let me not be very negative, because I was also, when I started for FMO in 30 years ago to set up small banks, all these banks in which we have done small investments are now bigger institutions. We are not talking anymore about the Société Générale or Banque Paribas. We are talking about the big institutions. I was 22 years Bank of Africa board member of the group, but I was also in various banks, and they are all growing very well. Coming back to your information about Mauritius, 80% I totally agree, because Africa Invest has a lot of these activities in Mauritius. But Mauritius is not a funding source. It is the DFIs. The DFIs where you have to go in and try to push for funding and to bring them inside Africa. And honestly, also Africa is not let's say, influenced by wars, as if I may say. Directly, we see some problems in Madagascar. Madagascar are used to this type of issues. But all the banks, and there are 4 bigger banks, are doing very well in Madagascar, although there is some political problems. In Congo, the same. But I really would like very much to suggest that we are forgetting now a little bit talking too much negative, and really look to all the countries which are doing well. Don't forget Tanzania, don't forget Kenya, and all these countries are very well developing in the financial sector. I can talk more, but this is my advice. Okay. Thank you.
Oh, thank you for that interesting comment. You did not have a specific question, right? Just to make a, okay. Thank you. No, thank you, Ben. Okay. I'm sure we'll catch up after the panel. As we are heading towards the end of the panel, maybe we have some closing remarks, but I'm happy also to give the floor to any other member in the audience that has a pressing question. No? Okay. So, I mean, I agree with what you're saying, Ben. I think the panel was actually quite positive, at least that was my perception. But as we know, perceptions are for everyone different. But let me maybe ask the 1 or 2 or 3 panelists to have a closing remark about, okay, so So how promising is this financial future on the African continent? And please keep it short because we have only a couple of minutes left.
Yeah, if I may just add to
Sure.
what the gentleman said, I don't think, and I agree with you, we were not negative at all about Africa. At least I was not. I don't think anyone else was. We're all dealing with Africa. So if we were negative about Africa, we'd do something else, okay, to start with. But no, my feeling, my message would be that the banks, and they're doing well in a lot of things, and as you say, Madagascar, they're used to it, in Ivory Coast, in RDC. Unfortunately, people are used to trouble on a regular basis. That's not the issue. The issue, I think, is that African banks need to pull together. You need some big banks, large banks in Africa, large banking groups. And to that, I add Mauritius. And Mauritius can become a funding place, okay? That's just a matter of putting the machinery in gear, okay?
Thank you. Please, anyone?
Maybe just to my last or closing remark, will go back to my opening remark. Is the future for Africa is promising? It's yes, 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 and yes. I added a fourth yes to it.
Let's make sure there.
So it's definitely it's very promising. We are just requesting, like everybody else, go on the ground. Reality is different on the ground than what we are reading from the news.
Okay, thanks.
I'll
Mr.
give it a
Curtis.
go just in terms of some concluding remarks. I think we've focused a lot on high street banks, but let's not forget about venture capital, private equity. You know, Africa raised about $3.5 billion for startups last year, and so that's a fantastic financing opportunity given the youthful African continent, the entrepreneurial African continent. I think a lot of that went into fintech, but I think if we could please also focus on agri-tech, edu-tech, gov-tech, many other opportunities for both investment and financing, and build those digital rails alongside the physical rails as well. The capital markets are there. You know, I have to advertise for South Africa. Our capital market is a massively deep capital market. Capitalization on the JSE is just short of £1 trillion. So yes, I know nowhere near London, but quite deep capital markets in my own home country. And the opportunities there, I think, are around creativity. So if everyone, high street banks and others, can get into more creative solutions, more proactive solutions. So whether that be blended finance, whether that be bringing your mother country along with you to try and provide some credit enhancement would be great. Draw on the diaspora, you know, massive African diaspora across the world, looking back home constantly, so diaspora bonds are a great opportunity. Sovereign wealth funds, I think a lot of sovereign wealth funds need their hands held coming onto the African continent, so please do grab their hands and come along. And my last comment is just to say, if you're in a high street banking environment, can we move into being far more creative and far more proactive and bring the engineers, bring the lawyers, bring the partners together and make, can I say, unsolicited bids to attack some of those challenges, which are in fact opportunities. Thank you.
Yeah.
Thank
I'll
you.
make
Please, yeah.
one quick remark, which is I think we're very positive about the future of Africa. And it's as promising as the ability of entrepreneurs on ground working in real economies to change the world around them, and the ability of people like us in this room to be able to channel finance to those entrepreneurs.
Okay.
Yeah. The last thing, as far as specifically focusing on the banking sector, I think fiscal discipline, which could be leading to an enabling environment for the banks to flourish, and ensuring that the inflation remains under control, that can facilitate the proper capitalization and the deployment of the capital for the long-term infrastructure growth in the countries. I mean, that should be the focus area. Thanks.
Okay. Well, I think that's it. So let me please thank the panel for all your very interesting comments. So thank you very much. Thank you, of course, for the, yes, please.